We saw the rand still trading around 6.79, but it looks like the rand is not protecting us from inflation forever.
Certainly not in February, because this was a bit higher than we expected. We expected around 6%, but when I look at the numbers, it looks like higher agricultural prices and some commodity prices are behind the increase.
So this is the factors we've been discussing for the past few months. What we have expected to come through is finally starting to feed through into the economy.
It's starting to feed through to the economy, and I'm afraid, I think in the coming month is going to be felt through the economy as global demand firms and as local demand firms. You're going to see that filtering through to the demand for manufactured goods, and that is going to push PPI higher.
We know that PPI doesn't have the strong link to CPI that it used to have, but there is still some sort of link. When would you expect CPI to start accelerating to the same extent we've seen in PPI?
As you pointed out, there is no link. That link has broken off a few years back. But this is an indication that price pressures in the economy are starting to filter through. And I think we've seen CPI at 3.7%. I don't think that's going to remain at that level for much longer. We're going to see that coming through to a high level from food prices, from higher petrol prices. We know that now in April we're going to see a substantial price increase in petrol, although most of that is going to be from what the budget has indicated. You know, it's not only oil prices, it's taxes that came through from the budget, but that is going to come through to CPI. So I think after the second half of the year, we're going to see pressure building up into CPI.
Are you worried?
I'm concerned. I'm concerned primarily for consumers, particularly those on the lower income end of the spectrum. You know, if you take food prices, you take transport cost, that forms a substantial part of the CPI basket in that sector of the economy. And you don't want those people to be put under pressure on those things, because they tend to put that in their salary increases, and with other things being the way they are, electricity prices and so forth, administrative prices going up, you certainly don't hope to see that coming through in the form of demand, wage settlement demands when the negotiating season starts.
Chris, because lower income groups have been shielded to a large extent over the past year, because we had high wage settlement demands last year. We also had quite low food inflation and energy inflation last year. Are things going to become a whole lot tougher for lower income groups in particular this year?
I think it's going to be a bit tougher, because if you negotiate based on past inflation, as we've seen in the past inflation is not going to give you a substantial increase on your salary bill. However, my concern as well is what the Reserve Bank is going to look at. They do say that in the next 2 years they don't foresee any pressure coming to push inflation above the target level. But there has to be some concern at the back of the Reserve Bank mind when they sit and make policy to say, if things change and things do not get settled as fast as we would like to see in the Middle East and North Africa, isn't that going to put more pressure on inflation? If demand continue to recover the way it is, you're going to see the gap, the output gap narrowing, and then that's going to put pressure on inflation. So I think they should start thinking about the concern that inflation is going to make them make a decision that they would not like to make sooner rather than later.
We also have electricity prices going up, I think, from midnight tomorrow by 25.3%. How long does that take to start feeding through to the PPI basket and to the CPI basket?
It's going to show into the PPI basket quite sooner than in the CPI basket. And more importantly, for electricity inflation, the problem is second round effects, because that is going to put factored into input costs by companies, and that is going to feed through to CPI a bit later on. So that is also a concern, but I think that has been factored into the forecast that the Reserve Bank put out last week. What
have you penciled in for CPI for year end, and what's your expectation on interest rates? When would you expect that first hike to come?
I don't expect an interest rate hike in the next few meetings. If there is one, there should be talk about that towards the last meeting of the year or second last meeting of the year. Definitely into 2012, we should start seeing that, because the bank has to influence expectation a year ahead. And if they're talking about CPI going out of the basket in 2014, they should start talking about changing interest rate stance towards the end of the year, very late in the year and into 2012. I don't expect that to remain where it is indefinitely. And I do expect CPI to be pushing towards the upper end of about 5% for the year for 2012.
Okay,
2011.
So by the end of the year, but perhaps retreating as we enter 2012.
Yes, yes.